going to be talking about structuring a loan. I was actually talking to a client yesterday and she cracked me up because she goes, Jen, what are you talking about when you say structuring a loan? And I was like, oh yeah, we should probably talk about that. So the ability to structure a loan is actually the number one thing you should be looking for in a lender. So a lot of times when I'm talking about rates and everything else, I'm always saying, go to the reviews. I cannot stress it enough. I can't. And it still boggles my mind how, once in a while I'll get a call where someone's like, well, Jen, why are you better than this other lender? And I'm like, okay, this is an unusual question. But what are their reviews like? Are their reviews better than mine? I mean, what are their videos like? What are they teaching you? What are you learning from them? Tell me. And they're like, well, they have no reviews and they don't do videos. Okay, I don't know how you're going to compare us then. I mean, honestly, that's the thing. It's impossible to compare lenders without third-party reviews of people who've gone through the system, right? You can't tell, poor Bob Jones, right? Like, he's always, ironically, I actually know a Bob Jones, and he's a lovely guy. So, Bob, if you think I've been targeting you all these years, I totally haven't. I actually think you're amazing. It's a very generic name. Okay, so let's say that Bob Jones has 0 reviews and 0 presence. How do you know how he closes loans? You don't. And if you go to the company and you go, oh, well, that company has good reviews, it doesn't mean that Bob, I got to change the name. It doesn't mean that Al Smith has any idea what he's doing. It doesn't. The company may have good reviews. Al may have gotten his license a week ago. Who knows, right? That's why it's so important you guys check reviews. Now, a lot of people think I'm saying go to reviews so that you can see if people are getting good rates. Kind of. What I'm actually thinking you should go for is because there's red flags that you can look for in reviews that lead back to loan structuring. It's going to come together, I promise. So if you see in the reviews, they told me I could do VA and then they switched me to FHA. Ooh, we know that's my sore spot there. They switched us from conventional to FHA. They switched us from USDA to FHA. They switched us from anytime you see in a review that a lender is switching loan products, that is a red flag that loan is not being structured up front correctly. And you may be like, well, don't all lenders structure loans the same? No, that's like saying, don't all lawyers prepare for a case the same? No, and it's always interesting to me because there's huge differences in lenders and people assume all lenders are the same. We all do the same thing, like we're robots. Beep, boop, beep, boop. We're not robots. It's a lot of critical thinking. And the bottom line is some people are critical thinkers who can look at a situation and problem solve it or see potential problems and kill it quickly. And other people are just like, okay, let's see what the underwriter thinks. Okay, I mean, if they want to see what the underwriter thinks before you're in contract, cool. I do that sometimes. If it's a more complicated situation, I will 100% say to someone, let me run this by an underwriter. I am not comfortable for these 4 reasons. And I'll name those 4 reasons. But if someone just says, go shopping, we'll see what the underwriter says, it'll be good. No, that's someone who's sticking it up against the wall. You do not want your loan thrown up against a wall to see if it sticks, okay? Another red flag of that is if you see in the reviews someone says, oh, it took 90 days, it went to 3 different lenders before our loan closed. They're not structuring it right. They're sending it, that would be in a broker situation where they'd be sending it to 3 different lenders that were declining it before they figured out how to structure it and send it to the 4th. Structuring is important. So what is structuring? So it's the way a lender looks at a loan file and the way they put it together for the underwriter. Okay, so when I'm looking at a loan, I am looking for every red flag. Every red flag. I don't look at the positive. I look for the nightmares. And the reason I go negative first is because if I can problem solve for the negative, then I can focus on the positive. But if I just look at the positive and I ignore the negative, your file is going to get torn apart limb from limb in underwriting. No, we don't do that. We play by the rules. Okay, so A couple ways that I see loans get declined because of poor structuring. Number one, we'll get a call from someone and they'll be like, oh yeah, the lender said they could do this, this, and that. I'll ask 10 questions and I'll be like, yeah, that never was gonna happen. Here's what you need to do. Or you need to wait, or they're totally wrong, you know? Or I'll get something where they're like, hey, we're supposed to close in a week, but now they're saying this and this, and I'll be like, hey, like what's going on with your credit? And they'll be like, oh, well, I don't really have any debt, but I have telecoms, you know, I'm self-reporting to build my credit. Okay, are they excluding those debts? I don't know, let me see. No, they're not. Guys, if something's self-reporting, like if you're self-reporting a utility bill, we can exclude that. A lot of underwriters don't know that, nor do a lot of loan officers, right? That's why you need to be working with someone that knows their guidelines. So also when I'm looking at structuring, a lot of times if you fill out an online application, people will be like, oh yeah, like taxes $12, insurance $50, you know, whatever the computer says. We don't do that. When I'm structuring a file, I am doing pretty high on insurance now because what I'm seeing across the country, oh my goodness, insurance premiums have gone up. So I'm structuring your file for worst case. The reason I'm doing that is because I want to make sure you close. I do. I'm not going to do, you know, if all the stars align structuring, a lender who's structuring your file where the comets have to meet is a recipe for disaster. So I'm increasing the homeowner's insurance. I'm looking up the tax rate. I'm telling you to look for Melrose if you're in an area with extra taxes, mud taxes, all these different types of taxes across the country. We're having these conversations up front so that we can structure your file appropriately. Is there going to be an HOA? Are you looking at a single family? If you look at a single family and I qualify you for that, if you switch to condos, you have to tell me. There is all of this conversation going on, and the reason is that is how we put your file together properly. Now, another thing that can happen is the lender's not even reviewing what you put in the online application. Yeah. So if you want to test a lender to see if they're actually paying attention, put in some fake numbers. Seriously. Put in like $3,000 other. $3,000 other on the online application, I'm not kidding. And if they don't ask you within a few days, hey, what's that $3,000 in other? Why are you working with them? Right? Anything you put in should be checked. That's part of structuring the loan. You fill out the application, we call you and go through it and say, okay, what about this? What about this? What about that? If it's super clean, sometimes we'll just ask for documents and we'll try to match it up with the documents and then we'll go through it. But there's a lot of stuff that can go sideways. So we're constantly having those conversations. Now, if something comes up where it looks off, but then after a conversation with you, I understand it and it fits within guidelines, I'm going to have a letter of explanation from you in that file, because if I saw it and saw a red flag, the underwriter's going to do the same thing. So we prep for that. We make sure that when the underwriter looks at that file, anything where they go, I can't raise my eyebrows because of Botox. Anything where they do that, right? I already have it explained. I have it explained, guys. That's what we do. So the key is you need a lender who knows guidelines and is paying attention to your file. So, oh my God, how are you ever going to know if they know the guidelines and they're paying attention? Reviews. Reviews are so important. If someone's not reviewed, they are untested, right? It's really hard in today's age to not get a review one way or the other. Like, depending on the volume of clients. So let's say I work with 400 people. At least 100 are going to review me. At least. Okay? And if someone's saying they're doing a lot of business, but there's no reviews, how, like, either they're the most blah person ever, like, it just doesn't add up. Okay? So let's say you go, well, they have no reviews, but I really like them. Cool. When you guys fill out the online application, I want you to put $3,000 in other. And I don't want you to go out with a pre-approval letter that the system generates after you put in that fake amount. So I want to be really clear about that. This is a test to see if the lender's paying attention. Put $3,000 in other. See if they ask you about it. And then just be like, oh, I just want to make sure my docs were going to get checked. They might be slightly offended, but at the same point, you did your due diligence. You can even say, hey, this lender told me to do this to make sure the lender's actually checking. I'm so impressed you're checking. Thank you. Right? Cool. Okay. The other thing, if you're worried that they don't know guidelines, and you're doing a conversation before the app, say this. Sorry, I'm amusing myself today. So I just started getting commission like 4 months ago, and I'm making $20,000 a month in commission. My base went down, but like the commission's insane. So I think I totally qualify now. Okay. I would hear that and I would go, I can't use your commission unless you have a 2-year history. Did you get commission prior to this? Like, I need to know more. We're just going to go off of your base. Okay. I would say that within the first 2 seconds of you saying that. If someone goes, yeah, like that's cool. Yeah, let's go for it. They don't know their guides. They don't know their guides. Like, the commission one is the biggest tell on if they know their guides or not, because it's such an easy guideline, but so many people get tripped up on it. With VA, for my VA guys, you guys know I love you, do this one. Yeah, you know, my daughter's daycare is crazy. It's like $2,000 a month, but you know, that's fine, right? No, it's not. VA is the only loan where we take into consideration childcare, daycare. So if you said to me, oh, my kids, you know, daycare is $2,000 a month, that doesn't matter, does it? I go, yeah, it does. I got to put that in your debt to income, right? If they say, oh yeah, don't worry about it, they don't know VA. Okay, so those are 3 ways you guys can test lenders: fake income, the commission, the fake commission story, and then with VA, the daycare. Okay, now look, they may say like, the one problem with the daycare thing is that if you, like, say it if you don't have kids, because if you actually have kids under, I've got to think of how to do this where it doesn't look like you're then committing mortgage fraud. Yeah, just have it be something crazy. Just be like, oh, it's like $5K, you know, and then if they go, oh, that's a problem, be like, I just say, look, Jen Beeston told me to test you. Here's a link to the video, just so they know you're not trying to commit mortgage fraud. But yeah, like that is a good test. Definitely. Okay, so these are a couple tricks you can do in order to see if a lender is structuring your loan and knows what they're doing. I keep on going back to that VA one in my head. I don't want lenders thinking you guys are committing mortgage fraud. So look, let's do it differently. If you have a daycare expense, okay, if you have a daycare expense, just say what it is and then say that's not going to be a problem, right? Okay, so if your daycare is $400, just be like, you don't have to count that, right? And keep it with the same amount, because I don't want them thinking you're committing mortgage fraud. So that would be the tip on the VA one, okay? Questions as comments, as always, I'm licensed in 46 states. As you can see in the video, I'm constantly thinking through scenarios. Structuring is so important, guys. It's so important. Make sure your lender knows their guidelines. Make sure they're paying attention to your documents, because the bottom line is that if they're not doing those things, the only person it hurts is you. You're the one that loses the appraisal money. You're the one that could lose your earnest money. You're the one that could lose your inspection monies. It's you. The lender, all they lost was a client. So I hope this has been helpful. Thanks for watching.